Hello, trading has closed on January 7th, 2025. As always, we'll do our disclaimer, we'll go over our calls and then make our predictions. It's my trading plan for Wednesday. Wednesday is January 8th, 2025. Remember, it's my plan. I can change my plan. My plan can be completely wrong. Any trade you make should be made at your own risk. Periodically, I need to remind new viewers to the channel that the MEJT system gives targets. It doesn't give entries. The targets typically aren't that important when they're given as they are when they're further away, so you have to keep track of them. For instance, we had a 59.94.24 target today, and when it was given, it wasn't too helpful. But at the close, we said unless we gap down, it should print. That's right here. So the number printed and there was resistance over the number. We crossed an old target off the list, 59.29.21 from January 3rd. That's the target was hit and support at and just under the target. So these numbers were handy even though you had to wait a few days for them to pay off. You just have to keep track of them, but normally they print in a day or two. So normally we're going to see today's target of 59.38.65, which is my call for tomorrow, unless we gap down smartly. Now today's pattern had the early high, and tomorrow's pattern also had will also have the early high. We said at the close yesterday that the commonest thing was a gap and a prompt move outside the day's range. We said the gap and the move didn't have to be in the same direction. So here's your gap and here's your prompt move outside the day's range. That doesn't have to happen, but it's the commonest thing. And this is just a review. This is just a review of what we said. We have a possible target of 57.90 cash. Again, that's not the only target, and it doesn't have to print tomorrow. Well, during the day, we got an ultimate buy signal from MEJT. That's the minimum target. You don't have to get more than that. You usually do, but you don't have to. We had a lower target as well, and that printed. MEJT said this last drop is not for keeps. Gives us a target of 59.38.65, and unless we gap down smartly, that's my call for tomorrow. We had this big drop at the open. We consolidated for hours, and then with just an hour left to trade, we had this wall. Now the wall didn't go into the close, so you can't call it a wall into the close, but I think it's the same principle. If institutions really wanted to sell, they have plenty of time to do it. They're not going to wait till the last hour to sell when liquidity dries up. All people wanted to do was sell. Nobody wanted to buy, and that's really a sign of capitulation. Now, it can change. I mean, you can gap under this low tomorrow, and then these people were smarter than I am. That's always possible. But usually when you wait this long to break, it's a false break. Another sign of capitulation is to look at option spreads during the day. If you look at SPY, heavily traded options, near the money, near the expiration date options, we're trading with spreads of over 2 points. That's extremely unusual. When the spreads are that big, people are scared, and nobody, including the market makers who are forced to sell these options, wants to sell put options. So they make the spread so big that nobody with any sense would trade them, because you're behind as soon as you make a trade. You're down over 2 points if you want to sell it a minute later. And that's a sign of panic even among professionals. And panic spreads like that typically occur near lows. we have dropped in a straight line right to this line. It's not the first break of that line, so you don't have to gap under it, but it makes a lot clearer picture if you do. We also dropped right to DeMarc's TDST line, so the support's at the line and one bar under it. When you drop in a straight line to support, as a rule, you want to gap under it or the support holds. Now, it's not the first time we've gone to that support, so you don't have to gap, but it sure makes a lot clearer picture if you do. Well, how do we count this move? There should be some way to count the waves here. I think it's possible to count it as a completed 5-wave structure. Here's the low. I'm calling this a triangle. Take the middle swing of the triangle, take your Fibonacci target, you're right there. And if you take the last consolidation, which includes something which isn't even in the triangle, you're also at the Fibonacci target. So it's a double Fibonacci target of the prior consolidation. I'm counting five waves, and if you take the height of wave 4, you'll see it's exactly equal to the height of wave 2, which gives credence to the count. Now I'm starting to count from here for wave 1. And if you measure the height of wave 3, which is a clear 5-wave structure, I'm calling that wave 1. I mean 1, 2, 3, 4, 5. And if that's wave 5, I mean it's right there. That's right at the 61.8. So we have a completed 5-wave structure. Now, it doesn't mean it's the only count, but if it is the right count, we're going to have to make either 3 waves up or 5 waves up. Let's take it to longer term. Let's take a look at the longer term picture here. Well, this was the count I've been using. We have A, we have B, we have wave C in progress, green C, and we have a target of around 57.90, and that remains a valid target. So if this is wave A of C and it's a 5-wave structure, we're going to rally and go down, and that remains a valid count, but it's not the only valid count. If this is the height of wave green A, green C is right here at the 61.8. And how about blue C? Well, if this is the height of blue A, blue C doesn't fit, so maybe that's not it. But what if that's not the right count? What if blue A doesn't end here, but ends here? I mean, I can still take my green A. You can start green C either at the high point or the end of the wave, and there's your 61.8. What if that's A? I can count the waves. Here's black A, black B, black C. They all fit. And if you take the height of blue A, counting green B is ending here, which is still a valid count. You don't have to have the high at the price high, just at the, you can have it here. If that's the height of blue A, blue C is right at 61.8. If this lets me do it, I'll show you again. There. I mean, it doesn't have to be the end of wave green C, but it certainly could be. It's entirely possible by this count that we've had a panic low with a higher MEJT target with a completed ABC down with 3 or 5 waves up to come. It doesn't break any rules, and it's a possible count. Now, for that to work, this has to hold. And if it holds, it doesn't mean the hold drops over. I mean, let's go to the longer term count, if I can find it. I mean, I still wanted to have 5 waves up, and I would have to have a truncated 5th wave for this to work. So this could be an ABC. You could have a truncated 5th wave here, or this could be just A, and another ABC, and then a B down, and then a C down. Either one works. But I mean, if wave 5 is going to truncate, you could have this over right here, and then truncate and then drop. Depends if you're going to have a 3 or 5 wave structure, and even if it is a 5 wave structure, I mean, you don't know if you're making B of 4. You don't of black 4. You don't know. But in any event, it's certainly possible for us to count this as a completed ABC, regardless of what happens next. Now, I don't think the hold drops over, but you could certainly have a rebound here without breaking any rules. And if this holds, it wouldn't surprise me a bit. And here's my minimum target. But if that's a triangle, you're normally going to go past the triangle. So you could go even higher than this target. You could go over this high here. That's quite a rally. Now, my rule is the first 5 days of trading normally reverse what happens the first 1 to 2 days. That's in the new year. Well, the first day of trading was down, but after 2 days we were up. So regardless of what happens tomorrow, we're going to reverse what happens either the first day of trading or the first 2 days of trading. So it's going to work, but it's not going to be helpful. But the point is, we could easily have completed an ABC here. And if we have the rally tomorrow over this high, which is quite plausible, we're going to close over the high of January 2, which goes along with my observation that the first 1 to 2 days of trading typically get reversed by the time the first week's over. I thought the reversal was going to take us under here, but this wave count suggests it's going to reverse this whole drop. Doesn't make it right. We'll have to see what happens tomorrow. Wednesday's pattern has a yearly high regardless of where we open. There's a higher target. If we don't get down smartly, the rules call for it to print. The low of day is the fifth target of the prior triangle and prior consolidation. The wave count says there's an ABC that's complete. There were signs of capitulation. We have SPY options with huge spreads. We have a wall near the close, which was poorly timed. If we rally tomorrow, we could still drop again Friday if Woodson's date's correct. But we have a good chance this is a panic low with a good rally tomorrow. It isn't a lock, and if this low falls, just forget everything I said. It's the pattern with the early high, and that's today's call.